Habits change into character. Ovid. Well, my friends, your habits, that is 10 to 15 minutes each and every day, being involved in the markets, charting them, following them, making your practice trades, is so incredibly important. Those habits will change into character and make you a master trader over time. And I tell everyone, don't worry about how long it takes. It will take as long as it takes. If you will just stick with it, it will come. And then when it does come, you will make up for all the time you ever spent preparing and learning and studying and mastering. Let's jump into these charts. We see stocks and gold down for the day. We see Bitcoin and 20-year bonds up. Let's jump first into stocks. We've been talking about this. Things have started slowing down. We can see where things spiked up to a high last week. Still have a green candle on the weekly chart. But of course, we see that the first day of this new 2-day candle is actually a red down candle. Haven't seen one of those since the 24th and 25th, Wednesday and Thursday in May, right there toward the end of May. We can see where things started slacking up on Friday afternoon. We can see this on the half-day chart, and then moving down Tuesday and Wednesday. Markets closed Monday for the Juneteenth holiday. Now, what we also have seen is this spike last week in things popping up. Now, we are interested in that because that was, if you look at where do we have volume similar to that when things ended their down move, when this latest move started up that week, the 13th of March. When we see high volume and we see a spike and then price not reached again, that doesn't mean that we're not going to see things perhaps turn back around and go up, but it's just a signal to watch that if indeed this move slowly dies, we can see where that volume spiked. Now, we did have a decent sized candle there, as we did here. What's even more of a telltale sign is when you have high volume and a little small candle. I'm talking like a doji or a spinning top. And when you have spikes there at a bottom, that really is much, much more of a clue. Here's one right here on the, let me move this over out of the way of these annoying things that pop up. But you can see right here where you had this doji and that spike and then things turned around. Now, we don't trade off the half-day chart, but I was looking for a signal like that to show you. That is a telltale classic sign that is extremely helpful when you find those. And some people trade just off those kinds of things, and that's okay. You don't have to trade unless things are perfect. And if that's going to be your rule, then let it be your rule. Look at a lot of stock charts. Go back in time, see how they work. And when you find those working over and over and over on a specific stock or ETF, just trade on that. I mean, again, that's what this is all about. You learning by doing and setting and establishing your own rules. This is not about just what I tell you each and every day. This is about you taking what we talk about and using that with all your other knowledge to come up with your own trading criteria. The only trick here, my friends, is to do what works for you. And how do you determine what works for you? You have successful trades over and over and over and over and over again. That's what's important. Now, again, you've seen those rules that we have that every trade doesn't have to be successful as long as you cut your losses and you let your gains and profits run. So we see things again slowing down, pulling back over 2.5 days. That's on the S&P 500. What about the NASDAQ 100? We see the same kind of thing. We see the high was reached last week with higher than average volume. Oh, and here's a really good one. I was talking about dojis. There you go. Look at that spike right there in volume back on the week of the 13th. Now, you had these other weeks where things were moving down a little bit, sliding sideways, and then all of a sudden things just blasted off again. Is that not quite beautiful? It is beautiful. And again, look at that. You see that high volume, and then there's nothing going on candle-wise. You do see spikes in the wicks up and down, but that is a telltale sign of the insider selling out and then things spiking up. So what do we see here? We see things dying, at least in the short term. We see the 2-day in lots of indecision there. And of course, we see 2 days of down movement, still above the weekly trend line on both the half-day and the 2-day. So we are watching and seeing if this move is ending. Now, we talked about this yesterday. Bonds, of course, we got out of bonds last week because it appeared to us that things were ending as far as the down move goes. This is being confirmed more and more by bonds going up again today. Not a lot. This is not a spike up with lots of success here, but we do see things up 0.24%. We can see 5 days of up movement on the 2-day chart. The half day is not quite as clear, but again, that's why we use all the charts all the time. And of course, you can see higher than average volume on this spinning top of last week. And we talked about that before too. We've already changed from red to green, so we're looking to go long in bonds. We'll see if that works. What about gold? Gold down again for the day. That's good. We can see where gold has been down for the last 2 days. Now, it was down much further in the morning, gained a little bit in the afternoon, but overall gold still down 0.14, moving in the right direction. Prices below the weekly trend line on both the 2-day and the half-day. Lastly, we go to Bitcoin. And of course, what I've done here, since this is just the first week of this up move, I've gone ahead and started using the 2-day to try to give us some kind of, something to follow as far as trend lines go. You can see where things started moving up Friday morning, Friday afternoon, then on Tuesday morning, Tuesday afternoon spiked way up on Wednesday morning, not quite as much in the afternoon, but overall up 7.33% as things start to take off again in Bitcoin. If we look at where it spiked out, about where the most recent top was, somewhere in that $30.80 area, something like that, $30.54 for the day-to-day, so that the day 2-day. So we see that last spike was during the week of April 10. So again, surging up on Bitcoin, and again, hoping that it would move down a little bit more to sort of reset things, but it is spiking up, and hopefully this will continue. That is where we are, folks, as we end the day on Wednesday. Again, shortened trading week, only 4 days because of the Juneteenth holiday on Monday of this week. We appreciate you being with us. Hope that you guys are having a wonderful week, enjoying your summer. Don't forget to spend 10 to 15 minutes with us each and every day. We always love to hear from you. cw@chartingwealth.com is the email address. Be sure to subscribe and like. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.